I'm Zak Lambert. I'm the head of product for Plaid in Europe. I've been with the company for about 7 years, including opening up our offices in New York, London, and Amsterdam. Today I spend about 50% of my time with our engineering teams building the right things, and 50% of my time with customers understanding what the right things are to build in a sort of nice cycle. Plaid is the world's largest and best open banking platform. We were an open banking platform before open banking was a regulatory initiative. And it's super important for us to stay close to the cutting edge with all types of customers within the lending ecosystem and make sure that we're building the best possible products that we can across Europe and North America. I think there's like an inherent dissonance there where lenders want to write more loans and underwrite more customers, and they don't always have visibility into what the customer's underlying financial situation is. And if you go back a little bit in history, I think one of the reasons for that is when lending was first around, maybe not first around, but first around in modernity, you would go into a bank and you would speak to a loan officer. And broadly speaking, if that person liked you, you would get a loan, and if they didn't, then you wouldn't. That's bad for 100 reasons, all of which are pretty obvious. I think for the last 50 or 60 years, we've been in the era of the credit score, which is more equitable, more data-driven. It is no longer reliant on walking down to the branch and being charming. But it is not in real time. It is somewhat of a lagging indicator, and it doesn't actually take into account all of the data that we are generating about our habits now. That should be fed into a lending decision. And so I think we're now moving into a third era where lending can be deeply personalized, and incentives actually can be very aligned. So to the initial question of how do you keep consumers protected while underwriting as many loans as possible, it's simply just to ingest all of the information that they are willing to give you about themselves and their ability and willingness to repay, and taking that into consideration on the offer that you give them. So largely it's an incentive alignment problem where consumers want to be underwritten. They want these products, right? If you look at the UK, I think 20 or 30% of individuals, depending on the lender, are credit invisible or very thin file credit. But lenders need to actually do the work of meeting them halfway and taking all of the information they know about them into account. A couple of trends. One, we see cycle times going down, where iteration between lending models, between go-to-market motions, things like that are just getting faster and faster with the new tools available to us. I think second of all, transparency is becoming more important in some part because of that. So what makes a partnership work really well in the ecosystem is some combination of transparency and innovation, kind of, where lending is a really scary process if you don't know what's happening behind the scenes, if it's a black box. And so again, if I take that example of the 3 chapters, it is very deeply a black box when it's reliant on personal judgment. It's something of a black box when it comes to credit scores. I understand pretty deeply what goes into a credit score, and there's still edge cases on that where I don't really know what's happening. And that's both at the technical level and the level of when I'm in the application flow, it's not even clear to consumers all the time if their credit score is being checked, what the impact of even checking a credit score will do on it in the future. And so I think being really transparent on them or with them is important. We find that customers, when they tell users that going through an open banking process or through a Plaid journey won't impact their credit score in the future, they're almost twice as likely to convert than they were if you just sort of leave that up to them in non-expert language to decide if the thing that they're about to do is going to impact their credit score or not. And so I think ultimately transparency with the end user on what's happening and what your goal is the right way for these partnerships to get off the ground and be beneficial to consumers. And then kind of between partners, immense clarity and transparency in short cycle times on making sure that you're bringing something to market that you're really confident will improve the lives of a consumer or a business or some other segment. That confidence is obviously very key. And then working with that partner over time to make sure that you're building the best possible version of the thing. One of the interesting things that Plaid has seen in being in Europe for 7 years now is almost how B2B lending adopted first open banking. Because if you think about how B2B credit works, You're not underwriting a person totally. There's not like a well-developed credit score until you get to like the very, very tippy top of the enterprise spectrum. And I think out of necessity, a lot of B2B lenders started ingesting open banking data and building really sophisticated models and building models that were tailored to the business that was applying for credit to deliver a decision and actually deliver like a disbursement in real time. I think we're starting to see consumer lenders adopt on the same paradigm across a couple of different things actually. One of them is like, I think they have gotten the memo on real-time decisioning and like real-time data ingestion, where, you know, my credit score is a proxy of me. My spending habits and income habits are me. Like there's a pretty important distinction between those two, where, you know, if consumers have this data, they want to share it, and it helps them get more attractive rates, and it helps you underwrite your book better. That's something that you should absolutely be taking into account, in addition to credit scores. Like we see this as very, very complementary, and we don't see it in any way as hyper-competitive today. And so I think that like very personal, very real-time credit, where the user is brought along on the journey to the point of transparency earlier, you know, with us and our customers, is going to continue evolving. You know, ultimately, probably not in 2026, but probably in the years to come. Like that will become a very, very individualized experience, where my underwriting process is deeply, deeply tailored to, you know, both the proxies of me that we've used for lending decisions historically, but also my actual financial profile.